Hi, my name is Ranjit Singh, CEO of London Stone Securities, and I'm going to talk to you briefly today about US economy, US markets, and what the opportunities might be if you're trading or investing. The first thing I would say is this: we have had a fantastic start to 2019. We've had the best bull run for 30 years. In fact, Goldman Sachs was just quoted the other day saying that if you've missed the bull run for for January, you probably missed it for the whole year. Not sure if I agree with that, but it gives you an idea of how things are. However, two things I would say, and we've got to be very careful about. Number one, political uncertainty. There's a huge amount of political uncertainty in the markets. You've got Brexit, you've got the Italian crisis, you've got China, the trade war. And of course, closer to home in the US, of course, you've got the Mueller investigation, you've got the 2020 elections next year, that preparations will have to start presumably quite soon. So there are a lot of issues at the moment with the populist governments growing around the world, and that is going to create uncertainty that might affect confidence, investment, spending. So that's one factor. The other concern I have also is about the growth or the slowdown in possible growth this year. We've obviously had 10 years of unprecedented growth from 2008 to 2018. Last quarter was very strong as well. But a lot of the numbers that are now starting to filter through give me some cause for concern. So, for example, the December ISM manufacturing index was down to 54.3%. That's the lowest month-on-month results for the last 10 years. And although it picked up in January to 56.8, it's still a relatively low number. The whole growth of the US economy at the moment is based on consumer spending, basically on a strong labour market and rising wage growth. If that starts to shift, which we're beginning to see now, that could impact spending going forward. So, for example, unemployment right now is around 4%. It's the lowest we've seen for 50 odd years, but it is gradually increasing. And of course, on top of that, we also have the issues with the federal agencies, 800,000 people, for example, either unemployed or not working or just not getting paid, which isn't helping things either. So there's a shift in slowdown in terms of the economic growth. And of course, we have a big impact, which of course is the Federal Reserves looking to raise rates. Last year, they raised rates 4 times. Donald Trump's obviously not very happy with that. And although, of course, the Fed should be entirely independent of the government, Donald Trump obviously doesn't believe that. So he has been known to say things like, you're foolish, you're crazy. And of course, that hasn't affected the decision makers. 4 times last year, they unanimously agreed to raise rates. And of course, that's going to cause a slowdown in the US economy. As I say, positives though, Dow Jones, for example, 22,000 on Christmas Eve. It's now up to over 25,000. Fast growing. Dividend yields are still very, very strong. But what I do think is that you're going to get a lot of uncertainty. There's a lot of trading opportunities out there. You just got to be very, very careful. So my view for the markets this year is going to be more of the same. A lot of volatility. Expect the unexpected, and be careful with those hedging strategies. Thanks for watching. I'm signing off.